So I think it has become 3 o'clock. So that's the moment that we start. A big welcome to everyone. Actually, I'm quite excited because this is the international launch of the work of Elisa Achterberg on innovating finance for the circular service economy. Which is part of a program of the Sustainable Finance Lab, of which I, Rens van Tilburg, am the director and a member. And this program is called Finance and the Common Good. And in that program, we sort of like try to explore what relationship finance means, which is a sort of like a way of finance that used to be very common in Europe, but in the decades before 2008, we've increasingly moved towards more a financial sector oriented on transactions. And we try to sort of like rediscover relationship finance, but with modern means. So also using the fintech. And that was what Elisa Achterberg, her project, was all about. So she has done this, what we call a community of practice, bringing together people from financial institutions, the challengers from fintechs, as well as the larger Dutch financial institutions, together with lawyers and innovators, to develop, well, what she is going to present today, and of which I'm very happy that you've all come to see this and to discuss this, because I think that's the real nice thing, is that we have been able, with our partners in Germany and Sweden, to actually get a very good crowd together of people from these different countries. And I'm very much looking forward to get to know you and to get to know your views. So please do use the chat function to signal to me as your moderator that you have a question. So I can bring that question to Elisa. And to the two very good discussions that we have for today. And I see that there is already a first question in the chat, which is, can we see the recording somewhere? I'm sure we will finally be able to put it online, and so we will inform you of where that can be seen. But at the same time, I need to beg a little bit your patience, because this is actually the first time that we use Microsoft Teams for the webinar. Also, if anything sometimes goes a little bit strange in this next hour, then please bear with us. Before I would like to give the floor to Elisa Achterberg to do her first part of her presentation, I would like to introduce to you Manuel Born, who is the founder and the Chief Operating Officer of Payactive, a German payment provider. And Manuel, could I ask you to shortly introduce yourself and your company, and maybe especially also to highlight a little bit what is the social dimension that you have brought into the world of payments?
Yes, welcome. Thank you to have the chance to be here. My name is Manuel Born, and I'm the co-founder of Payactive, as already told. And what we do is we develop a European payment platform that is sustainable in the mass payment market, technology-wise, but also as a business concept. So we founded the company in steward ownership, which is an ownership of the company which always will belong to the employees. And this is basically what we founded, yes.
Okay, well, thank you very much, Manuel. And so you will be the discussant to Elisa's first presentation. So we will hear back from you in about 10 minutes. And now, Elisa, I would like to give the floor to you for your presentation.
Thank you, Rens. Thank you, Manuel. Good afternoon, everyone. Great that you're all watching. My name is Elisa Achterberg. I call myself these days a multi-passionate entrepreneur because I'm an associate at Sustainable Finance Lab, but I'm also in the process of founding the Circular Finance Lab, which is a network of professionals working on financing the circular economy. And at the same time, I'm a researcher at the University of Utrecht on circular inclusive cities. And finally, which I'm going to show you today, I'm working on a very interesting project, which is called the Circular Service Platform. And in my presentation today, I would like to take you all on a journey to into a circular future. And I hope that my slides will load soon.
We know it takes some time in Teams.
It sometimes takes a bit of time, yes. I think we have developed with this CiSE platform something that's very interesting, but also that needs still some steps into the future. But therefore we thought, why not start there and see how we can translate it into steps we can take today with technology that it exists today. I think you can all see my slides now. So before we step into the future, let's take a short step back where we come from. We come from a linear economy in which we extract materials from the ground and we add value in every step, from which we make parts and eventually materials or products. And after a short life of using those products, we actually throw them away off the hill and destroying all the added value we added in all those steps and polluting the environment on top of that. The revenue model that's behind that is selling as many products as possible that are nearly broken. But in the future, in a couple of decades from now, I think our economic system will look fundamentally different. Instead of taking and putting our needs above the capacity of the earth, we will look at healthy and resilient ecosystems, which will provide us with all the things we need. But to do that, we really need to do business in a different way. We will innovate our products and services based on things we already have. So we will innovate them to dematerialize. That means we will develop services and experiences that are based on maintaining and optimizing the products we already have. But I think that's only possible if the revenue model no longer is based on selling as many products as possible, but is linked to sustainability and optimal use of materials. And the revenue model that so far seems to have the best incentives to do that, I call circular service models, but are sometimes also known as product as a service models. And in those companies, the result of a product is sold rather than the product itself. So to take an example, clean laundry is sold rather than the washing machine. So the washing machine in this case stays the responsibility and in ownership of the service provider. This means that the return of the material, the washing machine, in the end is guaranteed. This puts the real need of the consumer first rather than its product need. And so the matter becomes subordinate to the function. But if we take a step forward in this future, ownership will disappear and will be traded for collective responsibility. That means that responsibility for resource use and durability is placed on those that have the most influence on it. But whether such a product is actually suitable for maximal use depends on its supply chain. depends on the durability of the product and on the replaceability of all its parts. So suppose we will still be using a washing machine in the future to deliver clean laundry. Without the motor working, you cannot deliver this function. So the company that provides the motor in this case takes responsibility for its functioning and the take back of the motor if necessary. And he will be awarded accordingly. That means the longer it functions, the longer he earns from it. And that's really different from the way we do it in a linear for sales model, because in a for sales model, the responsibility moves to the next in the chain at the moment the product is sold. But organizing such a chain collaboration with so many parties requires a high degree of coordination, and with that a high administrative burden to manage all the contracts, all the money flows, all the information streams. And that's where we came up with the Circular Service app. We developed that with a consortium of inventors, I like to call them, different financial but also legal and circular experts. And the CiSE Platform is meant to lower all these costs of management and coordination and changes the relationship between all these parties. So how does it work? Suppose you're a user and you subscribe to this clean laundry service. Then in the CiSE app, a digital wallet is created and connected to your user account. And all the stakeholders that are co-providing the service, so that can be the maintenance provider or the manufacturer that delivers the washing machine, or even data facilities, they are from the use fee, the use fee that the user is paying is automatically distributed to all these stakeholders. So when the user consumes a unit of laundry, its wallet is charged and is immediately distributed to all these parties, and that without a central party that is coordinating that. And in this way, many small transactions become cheaper, but also transparency is created because a transparent ledger is created, which provides the trust for all these chain partners to collaborate. But as we know, there are a handful of front runners at the moment that are already working on business models like this, but they're struggling to attract capital needed to grow their business, because the current financial logic is based on linear ideas, on linear models. They're based on depreciating assets, on growing sales targets, and on zero residual value. And to make matters worse, they have to operate in a linear economy where competition is the norm, and they have to compete with cheap disposable alternatives. Although these circular service models are similar to things we know, such as rental or lease models, they are in a few ways really different. The first is circular products are oftentimes of low value. Think of smartphones or headphones or washing machines instead of the big machines we know in traditional lease models. And they can appreciate. That means that they can increase in value because they get upgrades or repairs. And they have a harvest value at the end of life because they can be used a second time. Also, assets, there are no models yet that can value those assets, those appreciating assets, and therefore they're oftentimes deemed as unsuitable as collateral for a financial model for finance. Thirdly, the operational risks are very different because cash flows come in based on use. So that can be per minute or per kilometer or per washing cycle or per hour. And that makes the inflows of cash very uncertain. And lastly, liabilities become very complex because the responsibility of the product is shared between many parties and the user. And therefore, the liabilities become very, very complex to track. And with this, I end my first part of the presentation. And I give it back to Rens. Thank you.
Yes, Elisa, thank you very much. I immediately give it to Manuel to give his reaction. And I saw there was already a first question in the chat. So that one I will post to Elisa afterwards. But please, an invitation to everyone. If you have comments or questions, put them in the chat. But now, first of all, I'm very curious what this presentation has provoked as a reaction from Manuel. Manuel, please go ahead.
Yes, thank you for the word. So in the beginning, I told that I have a presentation, so I could share it. I would somehow also like to, but I can start also with talking about what Elisa was doing. So when you can give me the sharing rights, that would be great. Otherwise, I do it by talk. What Elisa told is we are dealing with somehow what happens when the asset of the product is changed from an ownership to a company and you have a rental and subscription model. And the fun thing about that is that in payment, it changes a lot because when you go back in the history of payments, we were beginning from you had a product you wanted to buy and then you bought this product. So it was a one-time payment process. It was a one transaction per time. And it's changed to subscription models. It changed to recurring payments. And I think what was a very good example is, for example, the rental fees you pay for your house or your flat. This is something where we already know how it is, like when you somehow pay something monthly or recurring and you don't own it, you still can live in this flat. It can be also a better quality. You don't have to care so much about it, but you simply pay for the use. And when you bring this to products like micro products, there are occurring some little problems, like when the value of the product is not like thousands of euros, when it is let's say 150 or 200 euros, or let's say 500 euros for an electro scooter, then it's simply a problem to have transaction fees by each of these transactions, which are somehow matching equally to what you pay for rent. So what Elisa already mentioned in her presentation, which is great, is that you need to think about payment clusters in the future, which are different from this style when we compare it with the washing machine, that you buy a washing machine and it's a one-time payment. Suddenly you have you are paying for the washing of your clothes, but the payment is way lower. So instead of buying a washing machine for 600 euros, you pay €1.50, and these payments have to be clustered because for sure all of you are not washing once a month or once a year. You're washing once a day. You're washing every the second or third day in a week. When you have a family, even sometimes more than twice a day. And therefore, we need to think about other clusters in the payment industry. And we, as Payactive, did this with the infrastructure we already have, which is the infrastructure of EPIX and direct debit in the European Union. And what we did is we developed the direct debit into a form that it can be also used for microtransactions in a cluster. So we can cluster the transactions and then bill them, for example, once a day, once a week, wherever it happens, and not like that we are processing all CLV lists. So it is amazing what Elisa presented, and we definitely just can agree that we have to rethink payment for the future also in this kind of case. So basically, this is also what I have to say for this as a reaction first. I think there will be some questions coming. I'm glad to answer, but I will give back now to Rens.
Yes, Manuel, thank you very much. And indeed, you recognize this development that Elisa has described, and show how also your company Payactive is able to process those kind of payments. Indeed, there's a question, actually already two questions from Tom Woodroof. So the first one, and maybe I'll start with you, Elisa, to answer it, but Manuel, feel free to add. Is for this new circular economy that you describe with product as a service, if the individuals don't own the things, then who do? So is that corporations or are that communities? And he added a second question or comment, saying that if you use such a model of rent, that by definition that's extractive. And are we actually want to encourage a rentier economy? Adding that in the UK, the private rented housing is often of low quality, expensive, but people need to buy it because it's the only option that they have. Elisa, how do you relate this to your vision of the circular economy?
Yes, well, first of all, good questions, both of them. Very interesting. Part of the first question we will speak about later on as well, because we have the goal of the CiSE app is actually, well, of course, to lower the high capital pressure that entrepreneurs now experience, but also to spread out all the value amongst much more people, including the users. So I think it's very important that the users are really part of this and also get a stake actually in the washing machine, both to make it a more equal and citizen-based financial system, but also because you then get an incentive of the user to take better care of the asset. So thank you for this question. I really find it also very important. And the second one, to move to a rental economy, I share also your hesitation or skepticism if we want to go there. But if we can frame it differently, think of the whole minimalism that's going on. A lot of people are very enthusiastic about Marie Kondo, for example, the Japanese minimalist or decluttering coach. I think that's a very appealing way to look at the stuff you own. Not everything in your house you really need to own, right? I mean, we don't need cupboards full of cups and plates and stuff for that one time a year dinner party you host. Why not rent it? So first of all, it makes you more conscious about the extras, the more luxury things. Same for clothing. I mean, you can have a very basic wardrobe and then rent for a special occasion a nice suit, but you only need it for one day. And that holds for so many products we currently all own, including washing machines. We don't have to own all of them, but I do agree we don't have to rent everything. So I think there's a difference between basic stuff and simple stuff that you can have and rent the things that are luxurious or extra, and we should look at that to look at our economy actually as Marie Kondo does. To every product we have, we don't need to make everything circular, but look at it. Do we really want this in our economy? Do we really like it and cherish it? If not, let's stop producing it. And I mean, but that's maybe a bit of a personal view on it. And I hope this answers your question.
Yes, thank you, Elisa. And I think this also has led us this kind of thinking to discussions about degrowth that we're not going to open up here now. However, I'm actually quite curious what Tom Woodruff would think from your reaction. And I know we can unmute him, but maybe Tom, if you would like to. I see there is already a reaction. Tom is a committed minimalist, but don't believe we can change the economy with shoots. But okay, so maybe is it possible to unmute Tom so he can just shortly, but I have to say shortly because we have other questions as well. Say a little bit about what he means with the shoots mentioning, because I don't completely understand. I think Tom, you can unmute yourself now. Otherwise, in the meantime, at least I want to ask Manuel, because there is also a question about the payment. But so I want to put that one to you. But also, I know you are a circular designer by training. So if you would like to chip in on the previous discussion, please feel free. And otherwise, there is this question on. I'll repeat it from Hans Florian Hoyer. Which says when open payments are clustered, is there also clearing and settling to reduce the volume of payment instruments?
Yes, when I got it right, the clustering, what we do, when we deep dive now into technology of payments in Europe, when you deconstruct a payment and credit card transaction in the European Union. This is more like the same like direct debit. So for sure, there is a reduction, even what we do, because we go back to the banking infrastructure. So we don't do clearing accounts anymore. We are more like directly connecting the bank account of the client and the company. And this is something we stitch together again. And when you see things like Alipay, PayPal, credit cards, Stripe, or so on, you have clearing accounts. So you have somehow like an account in the middle of the company and the client, which causes some problems. And we are stitching this together directly. So for sure, this means that the clearing and the settling is also a reduction of the payment instruments, because we basically have a good one in Europe. This is direct debit and bank-to-bank transfer.
Okay, Manuel, thank you. And any famous last words from you on this idea of the rentier economy? Or you
yes, yes, this I like very much, because I'm also going into the minimalistic field. So I'm also very interested in that. I'm trying to live as this also. And the fun thing about the principle of minimalism is that there you are closing up with cradle to cradle, which is my field of, or it was also my field of research. And cradle to cradle improves the quality of a product, because you reuse the materials, and the materials have then a certain stability, or they have to have a certain stability. And when you compare it for housing, for example, from the 60s or 50s, we tended to use as an economy materials that were more cheap than long lasting. And when you think about cradle to cradle, you have to think about or rethink about the materials, and they have to be very long lasting and recyclable, which makes them from the quality more sustainable, but also more good. And maybe we have to rethink not the economy, but we have to rethink our use of resources on this planet.
Yes. Well, thank you very much, Manuel. And as a moderator, I also have to be a minimalist. But then concerning the time, which means that we're moving on to the second part, almost to the second presentation of Elisa. But so, Manuel, thank you very much for your reaction here and the conversation. But hang around, because if you want to chip in the discussion after Elisa's next discussion, that's very welcome as well. However, we will start that discussion with a reaction by Cecilia Repinski from Stockholm, from the Green Asset Wallet. And Cecilia was a pioneer on sustainable finance, working on that more than 20 years. She moved into the fintech space, I think in 2017, at least that's when she started the Stockholm Green Digital Finance, where they developed, amongst others, the Green Asset Wallet, which is something that I think over 2 years ago, she committed herself to completely. Cecilia, can I ask you very shortly to just introduce the Green Asset Wallet? So what are you currently working on?
Thanks so much, Rens. So that's very true. The Green Asset Wallet started out as an innovation project within Stockholm Green Digital Finance, perhaps similar to the CiSE Platform within Sustainable Finance Lab. We will have to see. And it outgrew its nets, basically. So we decided to spin it off as its own company. And the Green Assets Wallet is really committed to shifting the trillions toward real-world positive impact. So redirecting capital flows at scale to the sustainability transition and making sure that that capital leads to measurable and verifiable positive impact in the real economy. We focus very much on the labeled bond market, the sustainable debt market, for that reason, because it's an asset class that has a very clear connection to activities in the real economy that we can measure and follow up on. And our focus is to use financial technology as a means by which to provide data that's trusted in a cost-efficient manner. And just to see a connection to what you're doing with circular economies, these circular entrepreneurs, they are in dire need of access to capital. And that's exactly the kind of gap, financial gap, that we want to help close. There's so many important and impactful entrepreneurs who need financial access to grow their business models. And circular companies are one of those who struggle to access capital because of the way their business models are structured that doesn't really fit with the traditional financial industry and the measurements for assessing wealth, etc., that is standard. So our job is to hopefully in the future be able to extend capital or be a tool for such actors to more easily access capital, and being able to point to not only the financial validity of the business model, but also the positive impact, because that attracts investors as well. So that's what we do at the Green Assets Wallet.
Well, thank you very much, Cecilia, and very glad that you're here. Just like Manuel, you're an entrepreneur, a startup yourself. So in that sense, I think we can learn a lot from you. And indeed, let's hope that the CiSE will become as active in the real life as the Green Asset Wallet and Payactive already are. But whether that could be the case, that we're going to discuss after the second part of Elisa's presentation, where she's going to dive into especially the question how CiSE can be used by circular entrepreneurs to increase the ease for finding finance. Elisa, I give it back to you again.
Yes, thank you, Rens. I'm sorry, I have to click a little bit. Yes, so now we will discuss how the Circular Service Platform could help or shape the future of the financial system that fits to such a circular economy. So this app automates payments and contract administration for which creates a ledger, which I discussed before, with information regarding the income and expenses of related to the use of a specific product. In the example, it was a washing machine. And we found with a consortium, we looked into this and we found that this information, this data, this ledger could support current financing forms by creating more certainty and more grip on future cash flows. But also there are new financing forms that could start to exist. So to start with the most low-hanging fruit, I would call that's using the data to secure finance. So the payment patterns that come from the app could tell us could tell us both things about the technical life cycle of a product, so what the performance of the actual product is, but could also provide insights in the financial life cycle regarding this product. For example, dashboards could be created that are especially addressed to financiers, in which information about a specific asset can be shown. Here you can see, I don't know, do you have the same view as I do? Because there's weird signs on my screen. Does it look as it should or not?
It looks weird.
Yeah, for me as well. Well, just let me tell you what's supposed to be on this sheet. What you should see here is information about an electric BMW. It's a where information can be shown about the type of the asset, but also financial information on how much revenue this specific asset already generated up until now, but also information on all the service providers that are connected to the asset, and a log of events. So you can see how many kilometers have been driven, if there's a repair event, and the graph that shows like how long the payback period is, and how in what time your investment is paid back and expected to be paid back. But you could also zoom in other information of, for example, the performance of an asset. For example, here you see an example of a washing machine, where you can look into the current value of the asset, but also the time that the asset is already been used, or for example, the time that it's actually idle, so standing still, which is also very important information. Or you could zoom in on usage patterns, so the historical usage of this specific washing machine, and compare that, for example, with comparable other assets or similar other users. Or, for example, you can look at the type of product that is used most. In other words, a lot of intelligence can be deducted from very simple data points. But as said, also new financing forms become possible with this. If you pay the financiers directly from this user fee, just as the other service providers, the financing model is actually adapted to this circular model. But what is different if we do it like that? So first of all, normally, traditionally, you finance a company. Here, you finance the asset directly. Secondly, and that's also regarding the point about users, everyone can invest. So also users that want to spend their savings, or manufacturers that want to provide their product and pay back from the use fee is possible. So then the manufacturer actually becomes a finance provider as well. But so, and also traditional financiers can in this way invest directly in the asset. Thirdly, what changes is that the repayment or your financial returns suddenly becomes dependent on the asset performance. So if the asset keeps generating fees, slowly your investment is repaid. And finally, this means that every asset has its own financing mix. So every asset has its own group of finance providers surrounding it. And lastly, and I think that if we really want to reach a circular economy, we need radical financial innovation. And that can be done by actually bundling all those assets into a portfolio. And that's possible because all these assets share very similar properties. So imagine that you bundle this into a portfolio of millions of assets, ranging from headphones to washing machines to smartphones to scooters, and all these assets generate cash flows. This way, everyone could participate in such a fast-growing sector, from users that invest their savings, as said before, to institutional investors that directly invest in circular assets. In this way, the Circular Service app could function as a sort of investment vehicle or financing platform that brings together demand and supply for finance for these circular assets. You could look at it as a kind of fund where, depending on the risk profile of a financiers, some assets fit and some assets are maybe too high a risk. For example, suppose you want to finance some scooters for a specific neighborhood. When it's a new neighborhood, there's high risk. When you put them in a neighborhood where you already know how the scooters are used and how the community behaves, then it's a much lower risk investment. When we do this, we actually look at scale in a totally different way, because it now goes beyond the individual company. It moves beyond chains even. But still, there is room also for small players. So the idea is that a lot of small ones become big as well. Well, I'm a huge fan of this idea, but I think there are so many opportunities to this. First of all, for the service providers or the entrepreneurs, I think it becomes a lot easier to implement such a model and to actually raise funding for it. But also for society, it becomes then a more citizen-based financial system. That's also something which we know a bit from crowdfunding. So it's the similar thinking as crowdfunding has in its core. But also a larger group of people will have access to more sustainable products. And for the finance providers, it offers a whole new way of diversifying risk and to create the volume necessary to actually take the risk and start investing. I do realize we are thinking far ahead with this. We have to experiment still a lot with entrepreneurs and the technology, and also actually with metrics. So that's interesting to discuss with Cecilia later as well. But I think really that this could be transformational to the circular model. So happy to hear what you all think of this really radical new idea. Thank you.
Okay, Elisa, thank you very much for your bold vision. And indeed, now the exciting moment is there to give the floor to Cecilia and to hear with all her experience in sustainable finance, knowing what sustainable investors do and do not like to get into, and knowing especially also the fintech space, how she looks at this idea. Cecilia, can I give the floor to you?
Yes, thanks so much, Rens, and thanks so much for inviting me to comment on this really interesting study by Elisa and the team. So obviously, data is the way to go. And I think it's so interesting what you can do with data, because what you measure is what you focus on. And it really, I think I have 5 main points, and one of them is around what is the actual asset. And by measuring the different things, the asset is not necessarily the washing machine. The asset is actually the ability to have clean services for cleaning your laundry. And that is really interesting if we can convert that service into an asset class that becomes investable and appreciated by investors. I think that's really fascinating. And I would like to bring an example, a case study of another company just to explain some of these things. And it's a company called Wepower. They are originally based in the Baltics, but they have they work in Spain and Australia, etc. And what they did was that they saw that the producers of renewable energy struggled to access capital. So what they did was that instead of trying to access capital from the traditional actors such as banks, they developed a way to tokenize, convert an asset into something that can be invested. And the asset in this case was the renewable kilowatt hour. And they had consumers purchasing the renewable kilowatt hours that were supposed to be generated. They didn't exist yet, but they were supposed to be generated in the future. And that became income and investment in capital for the producers to actually start producing this renewable energy. Now, this is really interesting because it means that the investable asset was not the wind power plants, it was the renewable kilowatt hour that was supposed to be consumed in the future. That was the asset. And that purchasing agreement actually worked as collateral for banks. So what happened was that the banks could start all of a sudden, because there was a gap, and these digital assets could bridge this gap between the renewable energy producers and the traditional banks. So all of a sudden, they could start channeling finance to these actors alongside the purchasing agreements that could work as collateral. So data, because this was data, someone actually invested, this was data that could be worked as a collateral. What's also interesting that you talk about, Elisa, is with financial technology, the traditional roles that we have assigned to different actors, like this is the traditional investor, this is the traditional financier, etc. All of that gets mixed. It's disrupted, that kind of structure. And it's kind of interesting. You talk about manufacturers becoming financiers. In the case of Wepower, the consumers became the investors, because the additional actors weren't able to invest, but the consumers knew, I want to use this kilowatt hour next year, so I'm going to invest in this by purchasing this, so I own this and I can use this. Again, they didn't own the wind power plants, but it's very interesting. And I also know that you've been thinking a little bit about how you could use blockchain in this space. And I think blockchain is interesting because when you disrupt who you think about as a traditional investor, and you can invite different actors to become investors, you need to enable smaller ticket sizes, because otherwise you have this fixed admin cost per investment, and that calls for bigger investments. But if you use a blockchain-based platform, you can disrupt the admin cost, and you can actually deal with smaller investment sizes and disrupt that size bias, and actually have smaller actors like consumers becoming investors, which I think is very interesting too. There was a question to the first part of this session, which I thought was very interesting, around ownership. When it comes to sharing economy, circular economy, there are great benefits, but sometimes there can be negative side effects that are not intended for. We have a situation where I'm from in Stockholm, where the streets are flooded by scooters. And in principle, this was supposed to be a very sustainable sharing economy business enterprise. But because the streets are just flooded with too many, we have this tragedy of the commons. Because no consumer of the service of having a scooter, they own the scooters, they don't own the scooters, and they're everywhere. So a lot of these scooters are tossed into the river and into the lakes, and they are trashed, and they're everywhere, and they break down. Their lifespan, their life cycle has significantly reduced, which is a shame. And I think if you then think about investments as something that can both provide capital to entrepreneurs working with the sharing of circular economy, but also create incentives for the consumers to take better care of the asset, I see a lot of win-wins here. I'm sure if the consumers would also invest in this pool of scooters, they would take care of them. I'm certain. And maybe they would have, a better price for the rental, etc. So finally, I want to wrap up by saying that data can make wonders. It's a powerful tool to raise capital or to understand behaviors, etc., etc. And this is what you're working on here. And I think by combining financial data with impact data, you have a really solid business case for the circular entrepreneurs to raise capital from. And one way of doing that, especially if you think about using blockchain to track smaller size investors, is to actually tokenize the impact, like Wepower did with the kilowatt hour, because then the consumer investor don't only invest in the service, they also invest in environmental benefits, like the positive impact they can use as a footprint or offset or whatever. And by combining that data, so you have financial and impact data, you can really make a really good business case to attract investors.
Okay, Cecilia, thank you very much. And I'm sure that Elisa would like to react to your very encouraging words, but also some of the issues that you raised, which she can do in a minute. But first, I would like to get to a few of the questions that have been put on the chat. So actually, last Tuesday we had the Dutch launch of this report. And we did that with two circular entrepreneurs. One of them, by the way, of these moped services. Yeah, let's not get into the specifics of that. But one of the things that was his particular question, and I see that now also here on the chat, is who owns the data? Because his fear actually was that his competitors would be able to actually see too much of what he is doing. So that could be a drawback. And I see Gordana Kirans also asked that question. And then maybe Elisa, take in also the other question from Anne, who asked the question, so who is responsible for the overall performance of the asset? So these are two more or less like questions on how does this actually work? Could you go into that, Elisa?
Yes, well, a lot of things to answer to. But first of all, thanks, Cecilia. I really loved your encouraging talk. I think we agree on a lot of things. And I think it's a very interesting idea to look at the example of Wepower, because I think similar possibilities are in here as well. Because as soon as we create actually a separate currency, which is now exactly tied to the euro, because it's just reflecting €1 is one token in the system. But as soon as it is value in terms of clean laundry or value in terms of something specific, it might actually be valuated differently. So, but we should also watch out for regulators in this if we start to do that. But it's very interesting to think about. And also your point about the negative side effects is very important. I think we really also still have to see how circular markets will evolve. And I do also feel all the others that have like skepticism in this model as well, that feel like who knows what's going to happen. Of course we don't know it yet, and we have to monitor that. We have to keep on tracking what's happening and what's going wrong. I mean, it's all new, so we also have to acknowledge that we don't know it yet, and we have to experiment and see what's happening. And if the zwerf scooters, as Jan Raas called it in the chat, which you also find in Sweden, all the scooters everywhere. Yeah, we need to monitor that. And if users can be made more responsible and also a part of the financial system more, maybe they can, well, they will feel this urge to take care better. And your last point on the impact data, I think we should really discuss how we can connect, because how we do it now, we have a code of conduct in the CiSE platform, in which we have specified some eligibility criteria. So you can only enter, so it's a permissioned system where you can only enter if you have somehow stated specific circular intentions. But if you can combine that with actually tracking the impact, you can even base your rewards or your payback or interest rate, for example, on this impact data if you really make progress. So because you also want to see, of course, there's good intentions, but are they becoming real? That's important. And for investors, more and more as well. So it would be very interesting to see how your work could plug into ours. Oh yeah, the data, who owns the data and who would be responsible for the overall performance. That's very much context based. So at the moment, it's oftentimes the service providers that are responsible for the overall performance, but that's how it's now. All the front runners now are not working yet so much together with their chains yet. It's something they want to do, but they're oftentimes not part of the function yet. So, but that's something that you actually, well, have to put into contracts and specify, but you always have a service aggregator. So that's the main responsible person towards the consumer, but it has to be specified per context who that is. And the data ownership is a very important thing. Well, we find it very, we say we develop the platform with privacy by design. That means that only the data that you really need to make a decision, you get access to. So in the example of buying alcohol, you only need to know that the person is older than 18, here in the Netherlands at least, but you don't need to know how old. That's an example of how you work with in privacy by design and make sure that, so that's one of the design philosophies that we have in the platform, but also that is something that also still needs to evolve more and to know what's the minimal amount of data you need to actually have all the results we want. I think that, so I think it's very important, but it's all very new territory. And but it's something we really take to heart to make sure it's safe and secure. And that's also why it's a neutral infrastructure. It's not meant as a platform that's commercial in itself. It's meant to be only a connector, a neutral infrastructure with a not-for-profit goal. So maybe that also shares a bit of light. There's more information in a previous white paper actually about the governance of the platform. So if you're interested, please look at that one from 2019. It's on the Sustainable Finance Lab website, and send me an email if you want to know more about it.
Yeah, maybe we should actually send an email with that report as well as with this recording to all attendants, including maybe also the presentation. That was also a question. Maybe last point for you to take on, Elisa, before I give Cecilia and Manuel the last word of today. What I found very interesting is that Ricard Sagent, well, that's the problem if you go across the borders, you don't know how to pronounce names. But a Swedish initiative, the employer rental platform, saying they are doing something similar in Sweden. And they say to believe that it's very important that the structure, the asset, the contracts, the setup is solid and controlled. I think this is something you just touched upon. I don't know if you want to react to that, or otherwise it would definitely be interesting to contact them and to see how, because I guess the message is a bit that they've got it solved in a solid way with Amplio rental. So
to discuss that further. I think not for here, but let's take that.
Yeah. Elisa, then I thank you very much for your presentation and your reaction to the questions and the suggestions. Manuel and Cecilia, I would like to thank you very much. Are there any last things you would like to say based on the discussion? Maybe Manuel, asking you first.
Oh, thank you. So I was waiting for ladies first, but I can go. So what I really liked about what Cecilia said and where we can add something is that we need another data layer, which is the impact data layer, to measure the positive and the negative impact. We, in our case, we did this with the social cashback, that we added a data layer to any transaction we have in the European Union to measure the impact, whether it's positive or negative, and have also the possibility to have a compensation directly on that. So this is the change, I would say, for the future. We need to think way more with other companies. And that's why I totally liked what Cecilia said with, we have to combine these both worlds. We have to combine the finance world, which is a big infrastructure, and we have a wonderful network in Europe of that. But we have to add impact on that and a measurable form. Then we can measure companies and the footprint of the companies, and not just the financial footprint of a company. So this I really wish for the future, for my kids, for all of our kids, and for the next generation to be already done.
Great, thank you very much, Manuel, and again, thanks for being here.
You're welcome.
Cecilia.
Well, for the sake of time, I'm just going to keep it short and say thank you so much for a great presentation, Elisa and Manuel, for your commentaries, etc. And looking forward to following your work in this space.
Okay, Cecilia, thank you very much. And well, thanks to everyone attending. And I very much hope that this will prove that this was a kickoff actually of a dialogue between people enthusiastic about finance and the circular economy from the Netherlands, Sweden, and Germany. So to be continued, I'd say. Thank you very much.
Thank you so much.
Bye-bye.